Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm NECO by name, NECO Sunday by name. So, the accounting tutor will be treating, this class will be treating manufacturing accounts. So, we'll be looking at the meaning of manufacturing accounts, purpose of manufacturing account, elements of manufacturing costs, and we'll be also be looking at the layout of manufacturing accounts. So, we're going to start with the meaning of manufacturing accounts. It's common that some organization will be the one to manufacture their goods themselves. That is, they won't have any form of purchase of goods within the period. So they will be the one to manufacture their goods. So they will start from buying the raw materials used in the production of the goods. Then they will be the one to do the processing of the goods. Then thereafter, the goods are being sold to the final consumer. So the purpose of manufacturing account actually is to determine the cost of goods manufactured. So all the costs incurred in the manufacturing of that goods, we have to be calculated in order to determine the total cost used in producing that goods and services. So the organization must know, okay, what is the total cost that will be incurred by them in the production of that goods. And again, after the determination of the total cost used in production of that goods, so the next thing is to note those elements that have to be included in the determination of that total cost of the production of the goods. So we can move to the purpose of manufacturing account. As said earlier, the purpose of manufacturing account is to determine the cost of manufacturing the goods and services. So the purpose of manufacturing account, the first is to determine the cost of production. Then the second purpose of manufacturing account is also to determine whether there is any profit or loss during the manufacturing process. So the second purpose is to determine whether there is profit or loss in the manufacturing process. Then we have the element of manufacturing cost. So we have the element of the manufacturing cost. The manufacturing cost is having two elements. So manufacturing cost so we have the prime cost plus the factory cost. That is the indirect cost. So what is the prime cost? The prime costs are those costs that are incurred directly with the goods. So it means they include those costs that are traceable to a particular production unit. They are incurred directly with the goods manufactured. They are not directly with the goods manufactured. And this includes, the prime cost includes the direct materials plus the direct labor plus direct expenses. So when determining the manufacturing cost, the first thing is to know the prime cost. So those direct elements of cost that have been incurred directly with the goods manufactured are known as the prime cost, and they include the direct material. So the amount of material, that is raw materials, incurred directly with the goods manufactured, so that are known, and this type of goods can be traceable to a particular production unit. So once the goods are being manufactured, we know that okay, these materials will be is incurred with the goods manufactured. We also have the direct labor. This incurred the cost of wages and salaries paid to laborers or to human factor in the manufacturing of the goods, and this type of cost is also traceable directly to the goods manufactured. So the next thing, we also have the direct expenses. These include all further form of expenses apart from the direct materials and direct labor that have been incurred in the manufacturing of that goods. So the summation of all these elements give us the prime cost. So we have the direct materials, the direct labor, and the direct expenses. Now the second element of the manufacturing cost, which is the prime factory cost. That includes the indirect element of cost. This category of cost cannot be traceable to any particular production units. So these costs are incurred indirectly with the goods manufactured, and when these costs cannot easily be traceable to the goods manufactured, so they include factories wages and salaries, that is indirect wages and salary. They include rent in the factory. They include the position of plant and machinery used in the factory. They include all other indirect costs used in the production units. So that is all about the manufacturing cost. So to calculate the cost of production, we must be able to determine the prime cost and also be able to determine the factory cost. Okay, we can also have this important element also in order for us to determine the manufacturing cost, which is the cost of production. We can also have this important element, which is the work in progress. The work in progress. So the work in progress refers to as what? Partly finished goods. These goods are still in the process of production. That is, they are semi-finished goods. So they are in between the raw materials and what? And finished goods. So they are in between the process of production. So they are not through with the process of production. That is what I call the work in progress. They are partly finished goods. So we also have an important element of the manufacturing cost, which is the work in progress. So the work in progress is the partly finished goods. This part of goods are still in the process of production. This category of costs or goods are still in the process of production. This category of goods are neither finished goods, while also they are neither raw materials. So when determining the manufacturing cost, the work in progress have to be taken into consideration. So I've said earlier that the work in progress are part of are partly finished goods. They are neither raw materials, while also they are not they are not finished goods. So adjustments have to be made in order to determine the cost of production. Adjustments have to be made for work in progress, and when making the adjustments, we have to add the opening stock of work in progress and deduct the closing stock of work in progress to determine our cost of production. Now the next thing, we have the layout of the manufacturing account. So let's have the layout of the manufacturing account. So now we can have the layout of the manufacturing account. The first thing is for us to calculate our prime cost. One of the elements of the manufacturing cost. So we have to calculate our direct material. That is, we have to calculate the prime cost, and one of the elements of the prime cost is the direct materials. So let's calculate our direct materials. First thing is to calculate the direct materials. We have the opening stock of raw materials. Raw material. Okay, RW. Let's make it RW. We start for raw materials. Let's call it star. So we have our purchase of raw materials. So we have the carriage inward of raw materials just in the trading account. So we can have this. So we can less the closing stock of RM. So this becomes cost of raw material consumed. within the period. So after adding the purchase of raw materials to the opening stock of raw materials and also adding the carriage of raw materials to the total figure, to the figure we arrive at, so we are going to less the closing stock of raw materials to determine the cost of raw material consumed. The cost of raw material consumed means the total cost of raw materials used in the manufacturing of the goods and services. Now, the cost of raw material consumed is now serves as the direct materials in the calculation of the manufacturing cost. So these are our direct materials now. Now the next thing is what? This is direct labor. So we can have the what? The wages. So we can have direct wages. This serves as the direct labor. You can also call it direct labor. Now the next thing is to have the direct expenses, and this includes royalties. You can have royalties as the direct expenses. It's incurred directly with the goods. We can also have something like patent, copyright, and something like that. That also falls under what? Direct expenses. You can also be given this way as direct expenses itself written directly. So the addition of everything then give us our prime cost. Give us our prime cost. This serves as the direct materials. This serves as the direct expenses. This is direct labor. So we have direct expenses to calculate our prime cost. So we arrived at as one element in the manufacturing process. Now the next thing is the second element, which is the factory overhead. That is the factory cost. So we have to make adjustment for the factory cost. So the factory cost, we have factory power, we have rents, we have rates, we have indirect wages. So we have depreciation of plant and machinery, plants and machinery, and so on and so forth because of space. So we have to maintain the space. So addition of everything give us this. So we can have this. So we can make adjustments for work in progress. So add opening stock of work in progress. Of WIP, work in progress. So less closing stock. So we can less the closing stock. So after deducting the closing stock, that then give us the cost of production. So we can have the cost of production now. So our pre-cost now serves as cost of production in the period. So we can have a balance account as the cost of production. So this is the format of the manufacturing account. So if we are asked to include the trading profit and loss account, so we've done that already. So we can have the manufacturing trading profit and loss account. So we've done the trading profit and loss account in the previous lesson. So this is the format of the manufacturing account, the layout of the manufacturing account, and the trading account. This with the finished goods aspect, to determine the gross profit thereafter, to determine the what? Net profit in the profit and loss account. Thereafter, we can have our balance sheet in the process. So that means this account deals with what? Calculation of cost of production in the manufacturing process. And if we have the trading account included to the manufacturing account, that is the purpose, is to determine the gross profit when the goods are fully manufactured, that will have the finished goods and the goods have to be sold. So that means there will be gross profit within the process. So we can determine our gross profit by the organization, and thereafter we can also determine our net loss from the profit and loss account. Let's take an illustration. So we have an illustration on manufacturing trading profit and loss account. So the following balance was extracted from the books of Ratao Industry for the year ended at the 4th December 1995. We have the raw materials purchased, direct wages, carriage on raw materials, carriage on finished goods, sales down 2 salaries and have additional information. So that, okay, the stock at first 1995. We also have the stock at 31st of 1995. We have the raw materials, so we have the work in progress, partly finished goods. We also have the finished goods itself, and the goods that have to be sold. So the customer, that is, which is 6,000 naira, opening stock of finished goods, and we have closing stock of finished goods, which is 4,700 naira. Again, we have some additional information. We are told that 75% of rent and insurance expenses are to be chargeable to the manufacturing account, so that will be taken to the factory overhead. And again, we are told that plant and machinery were valued on 1st January 1995, that is 1195. We are valued on 1st 1995, and also 5,000 naira is to be provided for the depreciation. So 5,000 naira is to be provided as depreciation. Okay, the plant and machinery were valued at, that is an error, were valued at 80,000 naira as at 1st January 1995, and again 5,000 naira out of the value is to be provided for its depreciation in the period. So we are required to prepare manufacturing account and trading profit and loss account for the year ended 31st December 1995. So we can have the solution. We have the manufacturing, the trading, profit and loss accounts for the year ended 31st December 1995. So we have this. So we have this down. Now the first thing is to prepare the manufacturing account. So preparing the manufacturing account involves us determining the raw materials, everything that involves the raw materials. Okay, the first thing we have here, raw materials purchase of raw material. We have carriage on raw materials, carriage on finished goods. No, we don't need that. Next thing we have sales factory over. We don't need that now on manufacturing account, because first thing is to calculate our direct material. So okay, returns on raw materials, we need that now. We need the returns on raw materials. Okay, now stock on raw materials, we need the two, both opening and closing. Okay, let's calculate our direct materials. First thing, opening stock of raw material. So, which is the opening stock, which is 12,000 naira. The next thing is to add the purchase of raw material purchased. So we have that to be 100,000 naira. So that will be 112,000. So we also have carriage on raw materials. So we're going to add that. So then that is 2,600. So we have 114,600. So the next thing is the return outward on raw materials. We have to deduct that. So let's return outward on raw materials, to make it short, and that gives us 3,920. So we have to less that. So to the calculator. So we have 114,600 minus 3,920. So we have 110,680. Now the next thing is to less the closing stock of raw materials. So we have the closing stock of raw materials to be 8,000 naira. So closing stock of raw materials so we have 8,000 naira, so which is 680. Then we have 102. So then the figure we have has become what? Cost of raw material consumed. So which serves as the what? As the direct materials in the manufacturing process. So the next thing to calculate our prime cost is to add the direct wages and also the direct expenses. So we add direct wages already in this place. So what again, do we have any direct expenses? Okay, we have printing factory expenses. Okay, we don't have any direct expenses except from direct labor. So we have direct wages. And that is 40,000 naira. 40,000 naira. And now they give us 142,000. So that becomes our prime cost. Since we don't have direct expenses, that becomes the prime cost. So the next thing, we have our prime cost already. The next thing is to determine the factory overhead. That is the factory cost. Factory cost or factory overhead. So we have as the factory overhead, we are going to have factory expenses. So let's mark that. We are going to have, okay, if we are told that insurance, rent and insurance expenses are also chargeable to manufacturing account. So we have rent and insurance to be chargeable to manufacturing account. These cannot be chargeable to manufacturing account, but rather they will be chargeable to what? Profit and loss account, because they are not incurred in the manufacturing process. So they cannot be chargeable to manufacturing account. Some expenses are not incurred in the manufacturing process. Some are serve as an administration and some serve as distribution and selling expenses. So they will not be taken to the manufacturing cost. So we are going to, okay, we now have any factory cost. So we have factory expenses now. Here also we have rent. Okay, we have insurance. See the same thing. So we have rent. Manage the space. We have rent. So insurance, rent. So factory expenses is actually 12,000. And we were told that 70%, 75% of rent and insurance expenses are chargeable to manufacturing accounts. So 75% of rent and insurance expenses are chargeable to the manufacturing account. So 75% of insurance, that is 75% over 100 times insurance, which is 8,000 naira, So we have 0 cancel 0 here. So 80 times 75, that amounts to that amount to 6,000 naira. So we have 6,000 naira to be taken to the manufacturing account here. So 75% of rent also, which is 20,000 naira. 75% of rent times 20,000 naira. So we have a 0 cancel 0. So 75 times 200. So that's going to give us what? Times 200. And that gives us 15,000. So we have 15,000. So do you have any other expenses on? Okay, we have depreciation. We use that plant and machinery. The value on the first one, 1995, at 80,000 naira, and 5,000 naira is to be provided as depreciation for the year. So we were told that plant and machinery were valued at 80,000 naira on 1st 1/1995, and 5,000 naira is to be provided for its depreciation in the period. So depreciation of plant and machinery, which is plant and machinery that will be taken at factory cost, because plant and machinery are used in the factory. So depreciation of plant and machinery is 5,000 naira. So we add everything, that gives us 38,000 naira. So we can add it to our prime cost to get 180,000 naira. So that'll give us 180,000 naira. So the next thing is to make adjustments for the work in progress. We have the work in progress. So adjustments, add opening stock of work in progress. So opening stock of work in progress is 15,000 naira, or 15,000. So 195,000. So the next thing is to less the closing stock of work in progress. So closing stock of work in progress is actually 6,000 naira. So we have 18900. So this serves as the cost of production. What we arrive at as is the cost of production in the period. So we are done with our manufacturing account. So we have the cost of production now. So cost of production, which is 189,000. So we have 189,000. So the next thing is to prepare the trading profit and loss account. We are done with the manufacturing account. The next thing is to prepare the trading profit and loss account. So we can prepare the trading profit and loss account. So we have our sales. So let's prepare it here. Sales comes here. So our sales is 250,000. Switch our trading account. So we have return inward. Return inwards. That will be led from the sales. Let's return inward. That will be deducted from the sales, which is 2,760. 2,760. 2,760. That is 2,760. So we're going to less that 2,760. That gives us 40. That gives us 2. That's going to give us, that's going to give us 7. That's going to give us 4. And then we'll give us 2. So we have 247,240. Now the next thing is, so that gives us, well, the figure we arrive at is our net sales. So the next thing is to prepare to calculate the cost of goods sold. So we're going to have opening stock, of finished goods. The opening stock of finished goods is actually 6,000. So we're going to add cost of production to that. So we are not going to add purchase, but we are going to add cost of production. So we add cost of production, which is 189,000. That they give us 195,000. So the next thing Do you have anything on finished goods? Oh, we have carriage on finished goods. So you have to add that carriage on finished goods. So carriage on finished goods, that will be 3,400. So you have 198,400. So the next thing is, we've done this, we've used this. The next thing is to less the closing stock of finished goods. So less the closing stock of finished goods. So the closing stock of finished goods is 4,700. So we have 0, 0. We're going to have 7. We're going to have 3. We're going to have 9, and we're going to have 1. So this serves as cost of goods sold. We're going to have cost of goods sold. So we're going to have cost of goods sold. So we have cost of goods sold, which is this. So the net sales now is our gross profit. So it's determine the gross profit. So we're going to have our gross profit. Gross profit. This that is going to give us difference between this, that, and this. It's net sales and the cost of goods sold. The net sales for 247,240 minus the cost of goods sold, and our gross profit is 53,540. Now is the profit and loss account. The profit and loss account. So we have the total 247,240. 247,240. The balance account. Now the next thing is to brought it down to prepare our profit and loss account. Gross profit brought down. So it's just like the trading profit and loss account. We have 53,540. 53,540. So the next thing is to have the list of expenses. So we have insurance. So factory expenses, that are manufacturing account. But insurance, we expect that 75% has gone to the manufacturing process. So it means 25% will come to the profit and loss account. So the 25% of that is going to be, okay, 75 is 6,000 naira, while the rest is going to be 25%, which is going to be 2,000 naira. 2,000 naira comes here. So that is 8,000 minus 6,000. So now we have our rents. 75% has gone to the manufacturing account. 25 becomes here, which is going to be 5,000. So we have printing. So we have 900. The next thing we have discount allowed, which is 2,160. So we have return of raw material. We've done that. Provision for bad debt is on expenses. We've said that the other time. And that's provisions and reserves. We've done that. It's 2,000. Okay, which is actually 760. So we also have bad debt. We have bad debt, which is 1,570. So the next thing we have salaries. Salary, which is 10,000 naira. So what next do we have? Okay, that means we are done. The next thing is to calculate our net profit. So calculating net profit involves us adding all of this together. So we have 2,000 plus 5,000 plus 900 plus 2,160 plus 760 plus 1570 plus 10,000 naira. So that gave us 22,390. So we subtract that from the gross profits to get our net profits. So we have 53,540, 53,540. So 53,540 minus total expenses, that gives us 31,150. So that is our net profit in the period. So we are done with the manufacturing trading profit and loss account for the year ended 31st December 1995, and we are able to determine the manufacturing cost, which is cost of production. We are able to determine the gross profit from the trading account, while also we are able to determine the net profit from the profit and loss account. So in this lesson, we've treated all the things on the manufacturing account. We talk about the manufacturing account, the meaning of manufacturing account, that is the purpose is to determine the cost of production. Then thereafter we talk about the elements of the manufacturing cost. Thereafter we move to the purpose of manufacturing account, that is to determine the cost of production, while also is to determine whether there's any profit within the period of what manufacturing process. And again, we did the layout of manufacturing account, and actually take an illustrative questions on manufacturing account. So if you are having any confusion as regards to this topic, you can replay the video for better understanding, and some exercises will be displayed on your screen. Do well to attempt such a question. Thank you.